And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. What's going on, everybody? Welcome back, Dividend Stackers. I know it's been over a month since I made a video, and today I wanted to come back with a real update, not a hype video, not a fake everything is amazing video, just a transparent look at where this portfolio stands right now. And honestly, the story is mixed. On one hand, the overall position still does not look good from a price perspective. I'm still underwater in true gain, and that includes the dividends. But on the other hand, the distributions have actually stayed fairly stable, even though they are definitely below some of the higher payouts we were seeing before. And what's interesting is just last week, ULTY had actually started making some good progress and was even beating the S&P 500 over that short stretch. So that's what I want to break down today, where the portfolio stands now, how the income stream is holding up, what's improved, what's still hurting, and what I think of all this means going forward. So let's start with the portfolio snapshot. Right now, ULTY market price is sitting around $32.20. I currently have 323 shares. My share cost basis now stands at $52.21. My break-even price is right around $39. The market value of the position sits at $10,460, and my total cost basis stands at $16,862.81. My lifetime net dividends received now $4,266.78. And when you include the dividends, my true gain is still negative, about $2,195.45, which is roughly negative 17.43%. So let's just be real right away. This is not where I want the position to be. From a capital standpoint, it still has pain in it. If somebody looked at the price chart and only looked at the true gain number, they'd say this thing has been rough, and they wouldn't be wrong. And I think most of you guys would agree on that, but that is not the entire story. The reason this update matters is because the type of position is not just about the price movement, it's also about the income engine. And even though the distributions are not the highs we saw before, they also have not fallen off the cliffs. That is important because when you're evaluating something like ULTY, especially in a strategy like this, you have to separate two things. Number one, the market value and capital volatility. And number two, the consistency of the cash flow being generated. A lot of people will only look at the red on the screen. For the income focused strategy, the distribution matters too. And lately, that side of the story has actually been more stable than the price action might make you think. When we look at the last 10 weekly distribution numbers, not only that I track, but obviously are on the chart here, a few things stand out. First, yes, these are below some of the higher distributions that we've seen before. So I'm not going to sit here and pretend that the payouts are prior peak levels. They're absolutely not. But second, they've been relatively stable. They have mostly stayed in a fairly tight range instead of collapsing it. And that tells me the income stream has cooled off from prior highs, but is not broken down. And that's important, a very important distinction. Because if the thesis had completely fallen apart, you'd expect those numbers to just keep deteriorating hard. Instead, what we're seeing is a lower but still functioning payout range. That's a much different story than total collapse. Now, here's the other part that I think adds balance to the story. Just last week, ULTY was actually starting to show some good progress, and over that short stretch, it was even beating the S&P 500 by quite a good margin. And that matters because I want to keep this update fair. I do not want this to sound like I'm only focusing on the negatives. Yes, the bigger picture still has damage in it. Yes, the true gain is still negative. Yes, the overall position still has work to do, but it's also true that ULTY has shown it can still put together strong term bursts. And last week was one of those reminders. So to me, the real story is not everything is terrible, and it's also not everything is amazing. The real story is that the position has been mixed. There has been real price pain for quite a while, but there's also been resilience in the distribution and an occasional window of strong relative performance. And that's my honest take. One thing I've always wanted to do on this channel is to show the real journey, not just the green days, not just the exciting headline weeks, not just the moments that make everything look easy. Anybody can make videos when the chart looks perfect. The harder thing is making the video when the portfolio is still in recovery and showing people exactly what's going on. That's what this one is. This transparency update, this is me showing you that position is still under pressure, but also showing that the crash flow side has held better than some people might expect. And honestly, those are updates I think matter most. because they tell whether the strategy still has pulse when things aren't ideal. Now, here's another part of the thesis that matters a lot to me personally, and that's the idea of getting to house money in this position. And what I mean by this is I've put in about $12,596 out of pocket into this position so far, and I've received $4,266 back in lifetime net dividends. So that means I need about $8,300 more in dividends to fully recover every dollar out of my original out-of-pocket capital. At the current payout level with 323 shares, this position is generating about $155 a week. So if ULTY can keep paying around this range, roughly 54 weeks away or about 12 months away from reaching house money or full house money in this position. And that's important to me because once I've received all my original out-of-pocket money back through dividends, then in my mind, every penny after that is straight profit. That does not mean risk disappears, and that does not mean price stops mattering, but psychologically and strategically, that is a major milestone because at that point, the original capital has been returned and the position is essentially running on house money. This is one of the biggest reasons I'm so tracking it so closely. So even though the true gain is still negative today, the dividend recovery path is still very real. All right, so it has been a little bit since I've been away, and I appreciate everybody and all the views and all the progress and subscribers, all the likes. Appreciate all of that here. I have not lost hope in the ULTY YOLO experiment, and I will continue to update here. A little bit less than I had been, only because I've been busy. I was on vacation for about 2 weeks, so I could not post, but I promise to make sure we keep posting that. The experiment has not gone away, and I will continue updates. So please, none of this is financial advice. This is just what I am doing with my money inside of ULTY. ULTY YOLO out.